You're watching Beyond Markets. Today is a special one that we are focusing on the Industrial Development Corporation, established in 1940 by the Prime Minister then of South Africa, Jan Smuts, in order to create and grow industrial capacity. Today, of course, the Industrial Development Corporation, to an extent, still serves some of those objectives, but it has moved on. Let's look back over the past 20 years with the CEO of the IDC, Mr. GeoffreyQhena. Geoffrey, thank you for your time.
Thank you.
128 billion rand, 203 billion rand if you are using 2013 prices. It's a lot of money. Let's dissect it. Where did it go? What did it do? What difference did it make?
Thanks for the opportunity. 128 is indeed a substantial amount of money. The focus was really to align it with government priorities of the day. Now, if you go back, we look at where the priorities were, you would see that in the initial part of the 20, a substantial part of that went into the steel and the steel-related industry. That's one.
Right.
Also, it went into the mining. That's also that part. Now, if you come to the latter part of this 20 years, which is the last 3 years,
right,
there's also new industries which we have started. One which is worth noting is on the green. I think the green takes about, let's say, 13 billion rands of that.
The green economy.
The green economy. Yeah, that will be the renewables themselves,
right,
the wind, solar, and IPP. So what we've seen is really a move from the mining to the beneficiation, to the manufacturing, being
right,
on the metals and the chemicals, to some extent the services, which is the tourism,
right,
the ICT and the health, and then in the latter part to the green economy, which is the wind, solar energies.
But to an extent, largely, it has remained within its core mandate of industrializing the country.
Absolutely, absolutely. We are an industrial development corporation. We can't do anything different to that.
Sure.
The thing is, the focus is which sectors we see as growth, which sectors are aligned with government priorities. Second, in which sectors have the ability to create jobs directly,
yeah,
and in some instances indirectly.
Yeah. I had 3 parts to my first question, so you've answered the first one. What I want to know now is what difference you made and what kind of an impact you had in terms of job creating, because I think that's one of your core mandates as well.
When we look at the difference, for us, a fairly good measure is the ability of those projects to being able to create jobs.
Sure.
I think we've looked at about 360,000, give or take, I think, over that period, the 20-year. Those investments would have been able to create sure, those number of jobs. That's to us is a good one. But also, if we look in terms of the empowerment side, I think we have over the 20-year period, about 48 billion went into the empowerment.
Right.
So not only on the
48
billion rand, yes. So there we're looking at both the changing in ownership,
right,
okay, but also expanding some of those businesses where there's been change in ownership in black
sure,
economy. So, but also then the last part, at least, which is what we, maybe second but last,
yeah,
is on the regions. Because what we realized is, as much as we've got different provinces, but not all provinces
yeah,
have the ability to ensure that they generate enough employment. So our investments were deliberate in trying to encourage investments in certain provinces. I'll give you an example. In the early part, because of the steel and the steel-related ones, and the automotive manufacture of the engines,
right,
a substantial part went into the Western Cape.
Okay.
But in the latter part, it went into the Northern Cape, which is actually a good thing because now you're looking at wind, but also there's these mining projects. So that's it. And then also we've seen an investment in the small and medium-sized businesses.
Right.
There, purely because it allows us to be able to create employment, because we know rent for rent, SMEs create much more.
Yeah, more
whereas
jobs,
on values, I mean, it's the big ones.
Yeah.
So I think that I would say that's how we've seen the impact of that.
Yeah. Let's talk about the black economic empowerment aspect, because I think one of the accusations against the IDC is that it does not help black people. Now, you've just given me a number to work with, 48 billion rand. Who and what type of business has it helped?
It's been, the 48 billion has been varied.
Right.
It's been in most of the sectors that we've invested in. It's happened at different times. At the beginning, at the beginning when we changed, the major emphasis was on ownership change.
Right.
So you saw us participating in some investments where you were introducing BEs.
Okay.
But as we went through, then we talked about what we call expansionary BE, where we're expanding those investments. So
the existing
ones. So,
yeah.
so in the change of ownership, you'd find that, for an example, in the mining ones, where we would have introduced some in the mining sector, some shareholders would have been introduced.
Right.
But now in the expansionary side, we would find that some of the money would have gone in, part of it change,
yeah.
The shareholding, but then the other part would have ensured that we help grow those. So in which sectors? Mining would have been the biggest beneficiary because of its size.
Yeah.
But also we found in other sectors, like in the services sector, I mean in the tourism sector, we have funded that. In the manufacturing sector, actually in the metals, there's been a couple of second-tier manufacturers which we funded in that. In the tourism sector, but also in the health sector as well. So it's been in a number of sectors. The sector that we saw was giving us a good opportunity, but I don't think it has benefited to the same extent as been the agro-processing sector.
Right.
We've seen it, but I think we can still do a little bit more on that.
Yeah. Now let me be simplistic and let me speak as on behalf of the common man. 48 billion rand over 20 years. I'm doing a quick maths here, so maybe about 2 billion rand or thereabouts a year. Could you have done more? I know that's one of your stock phrases.
We can always do more. I think we should do more. This economy of ours needs more.
Yeah.
If you look at this 128 billion rands that we've invested, even that also is reflected on the 48 billion.
Yeah.
The bigger part of that has happened in the latter part, because what we've said is we need to up our level.
You've accelerated
we
the
have
approvals
done it.
and projects that you are
I mean, the last 5 years we've really accelerated our approvals. Yeah.
Yeah.
Okay.
One of the key aspects that you are addressing in that 20-year strategy has been around beneficiation and, of course, trying to boost the export base. I wanted to speak about these two in particular because they bring in an outside impetus that you probably not find in a businessman who's just going about setting a business opportunity because he has seen what he has seen. Number one, I want to know, in terms of beneficiation, what sectors you have addressed and what difference it has made, and also come to the export side. If you are able to give me some figures in terms of what you added to the export balance sheet, I'd be very happy.
Yeah, the figures on the exports will be tricky. I need to refer to that. But I think if you look at the beneficiation, what we've done is, for example, I mean, if you look on the aluminium side, I mean, we've invested on actually now not only the producing, I mean, there's something called Hulamin, I mean, which we've invested in
yes,
over
I
time.
remember.
So I mean, it looks out, yeah, it's still listed. Where we're looking at the beneficiation downstream. Yeah. But for us, is on the manufacturing on the metal side. So now it's not only now extracting the material, converting it into steel, but it's to convert that steel into components that you put into the automotives and all of that. I mean, one such example is we invested in a company called Bell. I mean, we funded them with it, where it's of its size, it's the only South African OEM.
Okay.
Although it
original equipment manufacturer.
Absolutely, of its size. So there you see the steel going all the way from being steel into an articulated dump truck that is used in the mining.
Right.
So it's the beneficiation of allowing us to going all the way there.
Let me interject. Do you think there will be a day when no iron ore will go to China and everything that's produced in Southern Africa stays in Southern Africa, and then what we send to China is the finished product? I
think that's an ideal
way.
The reality is we have to look at how much our economy can absorb.
Right.
And I think at this stage there would still be an export. I think for me, we need to beneficiate as much as possible. We need to maximize that and then export whatever we can.
Yeah. Yes. Staying with the theme of exports, again, I'll come to you and say to you, could we have done more on the export side, particularly given the fact that we know South Africa as a small country with an open economy is open to external vulnerabilities and struggles when you have these very, very vicious changes in the outside economic environment. Would there be a requirement to do more on the export side from the IDC side as a strategic intervention in order to protect the currency?
The reality is our economy, relatively speaking, is small.
True.
So we have to export, which is one of the reasons why in the early 2000s we started investing outside of South Africa.
Yeah.
So it made sense that we support our South African companies as they export. So could we have done more? Surely we should do more. In fact, what we saw is in 2008, when there was a recession, and we saw some of those companies that experiencing some challenges.
Yeah.
What we did is we assisted those companies so that they continue. I mean, now we put in up, we set aside about 6.1 billion, about 90% of that was taken up. And because a fair number, not necessarily all of them, but a fair number was because of those companies we're exporting. So we did support, but we can always do more, I think.
We can do more. Okay, thanks for that. All right, let's look at that overall then, 20 years in terms of the achievements that have been made. I mean, we have noted the number of jobs created, we've noted the interventions in the different industries. Now, I want us to look a little forward, and that's going to form part of our next discussion, where the IDC is going strategically in terms of what the government, present-day government, let me emphasize, wants it to achieve.
Well, I think going forward, what is clear is that we should use what we consume as a basis to industrialize. Right. What I mean by that, I'll give you an example. If we look on the green economy, we've invested on the IPP, but the reality is there's still a substantial part of those components that we import. True. So what we've done as IDC, we've invested in a number of companies which can help manufacture those. We do accept that we can't manufacture 100%. True. But what we need to do is to increase that. So that's one part for us. We know for economies to grow, we have to invest more into the manufacturing. That's one part. So what we're doing is we're focusing more on the manufacturing part. Okay. The issue also, which we find, for me, is always a low-hanging fruit, is on the agro-processing. Right. We know as a continent, we're still privileged that we can have access to land and we can be able to plant and produce. What we need to do is to continue to invest more on the processing side. Right. And that's one of the areas which we as IDC are ensuring that we invest in that as well. Absolutely. We are speaking to GeoffreyQhena, the CEO of the IDC, and we are reviewing their 20-year record. When we come back in the second half, we're going to see what Geoffrey has done since he came in, taking over from Kyle Muller, and then we'll also talk about what he's doing about Africa, because we know Africa is growing. South Africa may be struggling around 2%, but the rest of the continent is expanding. Don't go away. Welcome back. You are watching Beyond Markets. We are speaking to the CEO of the Industrial Development Corporation, Mr. GeoffreyQhena, and we are reviewing their 20-year record. Incidentally, Jeff was just telling me that he actually was here at the beginning in 1994 when that change of direction took place with the new government coming in, and he has been here. Not ever since. There was a break. He went away, but we'll look at that record later. I want us to continue the chain on that future look of what the IDC might well look at. Now, we spoke about the fact that you will need to export more, yes, and you need to beneficiate more and concentrate on the manufacturing. What about the continent? Because we know that South Africa as an economy, it was the largest in Africa. It has slowed down. Nigeria has taken over. Should we blame the IDC? Another conversation. But what are you doing about the continent? The continent provides tremendous opportunities. When you look at companies that are successful that way to expand, for me the logical place is to go into the continent. Sure. To go into the continent because, relatively speaking, there's still a lot of potential. There are some countries which are not as industrialized as they should be, so that gives you potential. Sure. I do accept that the infrastructure might not be at levels where it should be, yes, but that also provides an opportunity. The opportunity. That's the opportunity. So we started in early 2000s to invest into the continent. If you look at our capital base, our asset base, yeah, our investments, including the commitments, is about 15% of that. So it's an area into the continent. So it's an area which we are looking at. But I think what is important is that we need to go with South African companies. Right. But also, even if we help establish projects, because we do have, I mean, for an example, in Namibia, we've helped establish a cement plant, we have helped establish a chicken abattoir, we've gone into Ethiopia, we've been in partnership with a South African company, by the way, on the cement plant as well there. Yeah. We have a couple of hotel establishments which we've looked at, which we funded into the country. So there has been that. There's all that provides the opportunities there, and I think as the IDC, we are committed to assist and actually participate in ensuring that in the continent we help explore those opportunities. Yeah. How has that strategy come about? Is it a question of going where the opportunity arises, or there's a particular kind of thought behind it? Initially, we were just opportunity driven. Right. I think because we talk of the continent, but the reality is different countries. Absolutely. Yeah. 54, and I always like to say 55 if you include Somaliland. Yes. So it's different countries. So we need to. So, but what we have done in the last, let's say, 4 or 5 years. We've said, let's look at how best we look at the integration.
Right.
To say, what we mean by that, where can we invest in the continent where there's a clear linkage for both countries, for both South Africa and in the countries that we invest in. Right. Because as we know, I mean, different countries will need different things. For an example, others would have, for an example, iron ore, but they might need manufactured goods. Then how can we make sure that there's a proper and a sensible link?
Right.
For example, others might have investors who want to invest in mines, but they might not have their accommodation in the hotel. Who are our South African ones who have got expertise which we can bring in? So it's that linkage so that we have a win-win situation. That's what it is.
I remember attending one World Economic Forum summit, and I remember having a discussion with one of the economists, I can't remember who, and he spoke about a day, hopefully in his lifetime, where you would see the copper in Zambia driven down to South Africa, converted into steel or ferrochrome, or however it is, what they make out of those things, product made, and then driven back to Zambia as a finished product or not. Will that happen, do you think?
I think it could happen.
It should happen.
I think it should happen. But it needs all of us to be committed to that. It's not an easy solution. I think if we're all committed, I'm convinced that it will happen.
What are you finding in the continent, though, in terms of willingness and also in terms of policies that support that kind of thinking? Well, in some countries, what we find, what we take for granted here, they call it in terms of the government's infrastructure is not that given. So you have to do a little bit of more work. I think there's a lot of entrepreneurship in the continent. I think that's what we've experienced. More than in South Africa?
I think in some instances, yes. In some countries, actually more. In some countries, more. You see businesses thrive in some conditions which you think if it was in South Africa, they probably would not be. So I think we need to well, I think entrepreneurs by their nature, they go out and they find opportunities. They will exploit opportunities. And we as IDC, we want to help support those entrepreneurs because we see them here in South Africa. And I think even in the continent, as I said, I mean, we can be able to support it.
Is there a case to be made for going into countries like Ethiopia, like Nigeria, particularly Nigeria, number one, given the status, number two, given the size of the economy and the opportunities there, to link up with industries in that country, given the immense needs they have, but also from a growth opportunity perspective, and the other issue we're talking about, to boost exports, to link up with Nigeria and look at it as a strategic ally and grow relationships, but driven by the IDC?
There is an opportunity for that, but also, well, when you use Nigeria, there are institutions in Nigeria, and some of them we do have financial development finance institutions. Some of them we do have relationships with. For us, it just makes sense to have a relationship with those because they know the players, they know who are the players to deal with, they know the players who are not too well to deal with. I mean, in every country, I would imagine. So it makes sense to do that. I think it makes sense also to link up with countries that have a bigger market. Nigeria has.
True.
Ethiopia has. So that just makes perfect sense, yes.
Right. Okay, let's come back to the issue of manufacturing and the other projects that you're working on going into the future. I'm going to be controversial and say, I don't know. I'm looking at it as a businessman, perhaps, who's trying to start out in Soweto and say, when you talk renewables, you're talking luxuries, really. I just want to be able to set up a business because now you want me to get into technology that I can't get because I do not have the skills, nor do I have the market, frankly, for it.
Well, if you want your business to be around for an extended period, you need to do your research one. You can have a quick win, start as puzzle, which you compete with your neighbor. But the reality is, at some point, you won't be able to sell your products. So it will just make sense for you to try and be innovative. So now, but the reality is also we're in a global village. That's the reality. And
we need to be competitive.
And as much as we would want to convince people to buy local, there must be a case for them to buy local. So we need to be competitive ourselves. We cannot expect our local consumers to overpay. So that means we must do our homework. Okay, if we need support from government, if we need support from IDC as business people, I think we must engage and ensure that is that.
Yeah.
But we must bring in products that people will buy. It's well and good to say let's all be sentimental about this.
Sure.
But when it comes to
Nationalistic.
somebody's pocket,
Yeah.
I think it is important that the people feel comfortable.
Yeah.
And I think if I look, because we work with Department of Trade and Industry,
Yeah.
there's a number of incentives which they bring in to ensure that some of those industries are competitive. And I find that when people tap those incentives, together with the finance that we provide, they are able to be competitive, and they are able to provide products. I'll give you an example. There's a company called Chick Shoes, which is manufacturing shoes on behalf of Woolworths.
Right.
Now, it was started by people who were supervisors. They saw an opportunity. As IDC, we came in, we funded them, and they're doing. And one could have said, oh, but these people are supervisors, they wouldn't want to see running a business, they would have given $1.
Yeah.
But they're entrepreneurs, they saw an opportunity, we'll do that. I think we must think beyond that. We will always have the micro businesses. I think it's important. They play a very important role.
True.
We have CIFA.
And they need to be supported.
Yes, we have CIFA, which we wholly own, which is our wholly owned subsidiary now for almost 18 months.
Yeah.
And they are playing that role. But also we need to ensure that the companies that we fund end up in the core economy, end up manufacturing, so that we can ensure that this economy of ours creates those number of jobs that we need.
To be competitive, of course, we need to look at the issue of technology.
Yes.
Now, I know that's been one of your focus areas. Let's talk a little bit about what the IDC is doing to ensure that South Africa is technologically advanced going forward.
Okay. What we do is, because we invested early stage, it helps when people bring in new technologies. But over and above that, what we've done, we've invested in venture capital. I think by its nature, it tests new technologies. By its nature, it takes a higher risk. There's a propensity that you might lose the money.
Sure.
But we're saying we want to give this a chance. But also, side by side with this, we've been administering a fund for the Department of Trade and Industry, which is called Support Program for Industrial Innovation, which is actually supporting the innovation. I think that's been one of the very successes that we've seen over time, where new technologies have come in. I'll give you an example. We have a product now which IDC has been funding. It's called a Lodox machine. It's a scanner. It was started, South African technology, does X-ray in 14 seconds, fully clothed. And we're seeing now, it has taken a lot of time to bring it to the market, but we're seeing good interest in that. But also, side by side with that, there's a company which we funded, which is called Aerosuit, which is doing high-end technology. It's got arrangements or contracts with Boeing and Airbus, and there you have to make sure that your technology there, and they're providing first years, they are first year suppliers. So we are really encouraging that the innovations through our interventions.
Maybe we need to create some valley of some kind. You know, Silicon Valley we've heard Savannah Valley in Kenya. Maybe we need to think of some kind of valley here. But we need to move on. We're running out of time. 10 years is going to be next year, and you would have been at the IDC for 10 years as CEO, but longer than that as an employee of the group, if we go back to when you started in 1994. I want to look to the future, because now you have had 10 years in which you have taken over someone else's strategy, developed it, and then picked up and developed your own strategy for the IDC going forward. Let's look to the next 5 years.
Looking into the next 5 years, I think, for starters, we need to increase the level of investments that we have. I think there is no doubt about that.
Do you need a bigger balance sheet to do that?
Well, our
I'm
balance
asking
sheet,
on your behalf,
our balance sheet is still big enough. I think we can stretch it. It's got an ability to be stretched, and I think we can do that. When we reach a stage where we think we need to go back to the fiscus to engage, I think we will do that. But I think for now, we can increase this level of activity without necessarily going there. And I think we have the ability to do that one. What we need to be doing as well, whilst we're doing that, we should be investing in projects or in companies that deliberately want to increase the level of employment. I think we have to, because it helps to invest and grow. If you don't create the employment, I think we will not be really playing a role in ensuring that we address this issue of high level of employment. I mean, we don't create employment ourselves. The investments that we make create the employment. So it is important that then we proactively encourage those ones. Like we've done that in the past. We put 10 billion rands at Prime less 3. And people, we said, if you come in and you invest, we'll do that. We've set aside 1 billion for people under 35 for the youth, a prime less 3, so that they're also part of that. Because we have to invest in the youth. And I think that's one area as well going into the future. We will be putting into what we're saying to them is, we understand some of them will be new, will not have experience, but partner yourselves with the experience. So there's a number of entrepreneurs here who were in family businesses, who have got experience, whom the youth can partner with, because we need to grow those and ensure that we make that difference.
Now, you and I might not be around in another 20 years, but from where you sit, you are in a prime position to try to create an IDC that will be around for the next 20 years. What kind of an IDC would you see?
Well, I hope it will be an IDC that's at least 2 or 3 times the size. That's one. I hope it will be an IDC that, if you look at its investments, the 15% that I said is in the continent, that would have increased to more than 50%, because that's where the growth is. So it will be an IDC that is fully integrated into the continent.
Absolutely. GeoffreyQhena, CEO, IDC. Thanks very much indeed. You have been watching a special edition of Beyond Markets, where we're speaking to the CEO of the Industrial Development Corporation. We're done here. Good evening.